What does it take for a global giant to sell off a piece of its history, a 75-year-old legacy, just like that? Well, today we're diving into a massive shakeup in the pharma world where Novartis is doing exactly that in India. And believe it or not, it all starts with one absolutely staggering number.
Get a load of this, 3,180 crore rupees. To put that in perspective for you, we're talking about almost 400 million US dollars. It's a huge number, right? But this isn't just about the cash. It represents something much, much bigger.
What it represents is the price tag on a legacy. I mean, we're talking about a business that has been part of the landscape in India for 75 years. So the big questions are, how on earth did we get here, and what does this deal really mean?
All right, so here's how we're going to tackle this. We'll start with the handshake itself, then get to know the key players, pharma versus private equity. We'll crunch the numbers and then dig into the real reason for the sale. After that, we'll look at what this means for India, and finally, why this one deal is such a big deal for all of us.
Okay, let's start with the what. So what actually happened? Well, this wasn't just some overnight deal. We're looking at a landmark agreement that fundamentally shifts a major piece of the Indian pharma puzzle.
So that brings us to the who. You know, a deal of this magnitude always has fascinating players. And in this corner, we've got a global pharmaceutical giant, and in the other, a very sharp Indian investment firm.
So on one side of the table, you've got Novartis AG. They're this massive Swiss multinational, and their whole game is about finding the next big breakthrough in medicine. Then, on the other side, you have ChrysCapital. They're a top-tier Indian private equity player. Now, their job isn't to invent new drugs. It's to find solid, established businesses and make them grow. It's a perfect contrast, right? The innovator focused on the future, selling to an investor who's all about maximizing the value of the present.
All right, so we know who's involved. Now let's talk money. The how much. We saw that jaw-dropping number at the start, but what did ChrysCapital actually get for all that cash?
And the details here are super important. See, ChrysCapital didn't just buy Novartis in India. Nope. What they bought was a controlling stake, 70.6% to be exact, in a specific company, Novartis India Limited. And this is the part of the business that's actually listed on the stock exchange. That stake is what carries the 3,180 crore rupee price tag. Okay, so this leads us to the biggest question of all, the why. I mean, seriously, why would a global powerhouse sell off a business with a 75-year history, especially in a market as important as India? You might think something went wrong, but the answer isn't about failure. It's all about strategy.
Think about it. For generations, this was Novartis in India. It was part of their DNA. So why sell now? Well, it all boils down to a formal and kind of ruthless corporate process. It's something called a strategic review. And don't let the boring name fool you. This isn't just corporate speak. It's a pretty intense process where a giant company like Novartis puts every single thing it owns on the table from every corner of the globe and asks a very tough question: does this piece of the business fit with our future? And if the answer is no, well, it's out.
And hey, we don't even have to speculate about this. The country president for Novartis in India, Sanjay Murdeshwar, said it himself. This whole thing was the direct result of a global review of their portfolio. It wasn't about some problem in India. It was about a decision made at the highest level for the whole world.
So here's what their new global playbook looks like. It's basically a two-step plan. Step 1, sell off the parts of the business that deal with older, established medicines. You know, the reliable stuff that's been around for a while. It makes money, sure, but it's not where the explosive growth is. Then, step 2, take all that cash, all that management focus, all that energy you just freed up, and pour every last bit of it into creating brand new, cutting-edge, innovative drugs. It's a massive pivot from selling lots of older stuff to creating high-value, new stuff.
Okay, so what does this all mean for India going forward? You hear sold a 75-year-old business, and the first thing you think is, oh no, are they leaving the country? Let me just say it right now. The answer is a very clear no.
Nope, Novartis is not packing its bags. This isn't a retreat, it's a reshuffle. They're just changing their focus, changing how they do business in India.
See, it's really clever when you look at it. Novartis basically has two different companies in India. The one they sold is Novartis India Limited. Think of it as the public-facing company that manages all those older, well-known medicines. But the one they kept, that's Novartis Healthcare Private Limited. This is the engine room. This is where the R&D, the corporate brains, and all the operations for their future blockbuster drugs live. So in a way, they sold a piece of their past to pour jet fuel on their future.
Now there's one more piece to this puzzle,
a bit of legal housekeeping, if you will. Because the company they bought is publicly traded, ChrysCapital now has to do something called a mandatory open offer. Basically, the law says they have to go to all the other public shareholders and say, hey, we'll buy your shares too, up to another 26%, for the exact same price we just paid. It's a really important rule that's there to make sure the little guys, the small investors, get a fair shake when a big takeover like this happens.
Okay, so let's pull back and look at the big picture. We've gone through the who, the what, and the why. But what does it all mean? What's the major takeaway here? Because this one deal in India, it's actually a sign of something much, much bigger happening all over the world.
This deal is basically a textbook example of three massive trends all happening at once. First, you're seeing huge global companies everywhere streamline. They're selling off the pieces that aren't part of their core mission so they can focus on what they do best. Second, specifically in big pharma, the game is changing. It's not about volume anymore, it's about high-value innovation, finding that next game-changing billion-dollar drug. And third, you see private equity jumping into that gap. Firms like ChrysCapital are more than happy to buy these stable, profitable businesses that the giants are leaving behind.
So what we've really witnessed here is the unveiling of a new playbook for giant corporations. Novartis just took a 75-year legacy and completely reshaped it to get ready for the future. And you can bet this isn't just about one company in India. This is a blueprint. It's a model for how other giants are going to adapt and evolve. Which, of course, leaves us with one very interesting question. Who's going to be next?